What up with it, Hangout Gang? It's Crypto Crane here. Here's your comprehensive crypto market and regulatory roundup for Monday, February 2nd, 2026. From Wall Street innovations to Washington policy classes and token rallies. First up, we have Mastercard, Ripple, and Gemini pilot blockchain settlement payments. In a major push forward toward mainstream adoption, Mastercard is testing blockchain settlement for traditional card payments using Ripple's regulated stablecoin RLUSD. Mastercard, Ripple Labs, crypto exchange Gemini, and WebBank are collaborating to settle Gemini-branded credit card transactions using RLUSD stablecoin on the XRP ledger. This pilot aims to modernize credit card settlement by cutting down settlement time and costs with a compliant stablecoin instead of traditional bank clearing. If successful, this could mark one of the first times a regulated U.S. bank settles mainstream card payments via a public blockchain, pushing blockchain tech into everyday financial infrastructure. Next up, we have crypto market sentiment and Tom Lee's outlook. Markets have endured heavy selling pressure in recent weeks, but some analysts see signs of a bottom. Tom Lee, now chairman of BitMine Emerging Technology, says the crypto sell-off may be nearing a bottom, citing continued Ethereum network activity despite price weakness. Lee's firm has seen billions in unrealized losses, billions on its large ETH holdings, highlighting the market pain. Despite this, he argues fundamentals still support recovery and accumulation by digital asset treasuries could anchor a future rebound.
I'm going to say something that it sounds a little contrarian, but Tom DeMark is our advisor at BitMine in terms of crypto. He's been since mid-November saying Bitcoin would go to 77 and Ethereum at 2,400. So he's been waiting for what he calls time and price to align. This weekend, he believes we reached that alignment. So all the pieces are in place for crypto to be bottoming right now because we're getting the level and enough time has passed. So I think as long as crypto fundamentals are good, which is the case, Ethereum active addresses is going parabolic right now and activity. Part of it is, of course, Wall Street is building up digital assets and converging those businesses. If that's the case, then crypto prices should follow.
Next up, we have White House meets crypto and banking leaders on market structure. The meeting focuses on a stalled market bill structure that would establish a federal regulatory framework for digital assets, particularly addressing stablecoin yield and reward provisions. Banks want limits on how crypto firms offer interest on rewards on stablecoins, arguing deposit risk and financial stability concerns. Coinbase and banking groups are negotiating compromises to keep the bill alive before midterm deadlines. In parallel, a Senate committee has advanced a related bill focusing on clear oversight of crypto markets and exchanges, but lacks full bipartisan support. Next up, prosecutors blast Genius Act stablecoin law. New York prosecutors are publicly criticizing the Genius Act, the U.S. stablecoin law enacted last year. New York Attorney General Letitia James and other prosecutors argue the law fails to protect victims of fraud and may even give issuers legal cover to profit from misused funds, without mandatory restitution provisions. The criticism centers on an absence of mandatory rules requiring stablecoin issuers to return stolen tokens to victims of fraud, raising concerns about enforcement gaps. The law requires reserve backing for stablecoins, but prosecutors say it lacks the consumer protection seen in traditional finance, potentially hampering law enforcement. Next up, Hyperliquid. Amid broad market weaknesses, some assets are showing isolated strength. Hyperliquid's native HYPE token climbed about 10% after the platform unveiled HIP-4, a technical upgrade to add prediction markets and option-style contracts. The new outcome, trading tools are designed to offer lower-risk, fully collateralized contracts that settle within fixed ranges, differentiating them from leveraged perpetuals. This development is seen as expanding the use cases for decentralized derivatives beyond standard perpetual futures. As markets evolve between regulatory pressures and protocol innovation, next week's data and policy actions will be crucial for crypto's next leg. And that wraps up our crypto market update. Tune in tomorrow for price action, ETF flows, and any late regulatory developments as they unfold. Don't forget to hit that like button, share the video, and subscribe to the channel. Until the next video, peace.